Good morning. Welcome to Stock Market Today. It is Friday, October 23rd, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Get a free email. Follow along with this show. Get daily stock ideas to consider that hits your inbox every trading day before the market opens. So let's dive right into it. A lot to unpack today. U.S. equities finished higher Thursday, near the best levels of the session, reversing some of that selling into the close that we had been seeing throughout most of this week. Value was a big outperformer against growth. Energy led the market. Financials with the banks, healthcare with medtech also outperformed. Consumer discretionary and technology lagged. Treasuries weakened with the 10-year rate reaching the highest level since July, with more curve steepening. The dollar was firmer against the major crosses. Gold finished down 1.3%. WTI crude was up 1.5% on the day. As we get to the desk this morning, it's a mixed to slightly higher futures market here in Friday morning trading. Asian markets were mixed overnight. Hong Kong, South Korea, and Japan all higher. However, China was down more than 1%. European equities are seeing good gains. Treasuries are mostly weaker, with the curve extending that steepening trend. The dollar is weaker on the yen and euro crosses. Gold is up 40 basis points. WTI crude is up 30 basis points to kick us off on a Friday morning, where we see weakness was bought, but majors hold support. I did not mean for that to rhyme, but it kind of does a little bit. So for the previous 4 days, we had a trend of early strength being sold and a series of closes near the low end of the day. Yesterday, we reversed that. Early weakness was bought, and we saw some closes near the high of the day, in particular for SPY and IWM. The Qs, not so much. The basic structure of the market remains the same as far as I'm concerned, right? Intermediate uptrend with near-term support. SPY, it's 340, Qs, it's 280, IWM is 160. For SPY and Qs, resistance is at the September highs. For the IWM, the February highs are resistance. What I will note is that in our work, our overbought, oversold indicator, SPY and Qs have entered an oversold position. So that's what we've been looking for. We've been looking for these funds to enter an oversold position while holding support. So far, so good, right? Now, obviously, you don't just enter an oversold position and snap right out of it. It's a bit of a process. But to me, that is a sign to begin to look for ideas on the long side of the portfolio, to begin to find your setups, maybe get a little bit more aggressive with long ideas. The question is where, and I think we're seeing some shifts play out in the market. And we're going to talk about that a little bit later on as it relates to growth over value, as it relates to cyclicals and some of the stuff that we're seeing in our cross asset class work. But that is the structure of the market. And the structure of the market, in my opinion, is unchanged, right? It's easy to get caught up in the day to day, but let's take a step back, identify the trend, and then identify where are we within the trend, right? Bigger picture trends are up. We are at near-term support, and for the SPY and Qs, entering an oversold position within the context of those uptrends above near-term support. I mean, that's it in a nutshell, and that's what's driving my views here in the near term as we go forward. Now, our market in a minute. What are we writing about in the note today? Stocks hold near-term support levels. We touched on that. The copper to gold ratio is breaking higher, and that is important. Right, the copper to gold ratio has been a key driver in the growth over value trade, a key driver in the fact that groups like tech, comm services, certain areas of discretionary have massively outperformed over the past couple of years at the detriment or at the expense of groups like the materials, which have come on, groups like energy, and groups like financials, right? It has also been a big key driver. The fact that the growth is largely playing out in those mega cap stocks was a big driver of the fact that small caps were underperforming. Now we have small caps coming on, and we have a potential inflection point, or what we call a personality change, in small cap value. I go through a lot of details of that in my note today, and it's really interesting, something that I'm watching closely here in the near term. As I said earlier, futures do point to a higher open here today. Let's take a look at the power bars for the major indices. The Dow is still skewed bearish 3 to 6 after adding 60 basis points yesterday. S&P 500 131 to 81 on the back of a 56 basis point move higher yesterday. The NASDAQ was unchanged. Power bar ratio there is deteriorating, only 19 to 15 now. Small caps, big outperformer on the day. IWM up 1.71%. Look at that bull bear ratio, 752 to 240 for the small caps. We've been talking about it now for a couple of weeks, this strength that we're seeing in the small caps. And now we're seeing it on a relative basis as well. And that is interesting. Bonds down ticked once again, sending yield higher. You've heard me talk ad nauseum for the past couple of weeks about the curve steepener that continues to play out. And energy was your big group yesterday, up 4%. 4% on the day. So maybe some signs of life there. I don't know. Probably something that's worth digging into a bit further in doing work over the weekend. Power bar ratio still bearish, however, 3 bulls to 7 bears there. According to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major indexes are mixed. Our stock of the day, we're looking at a name here that's kind of on the smaller side of the spectrum. Rush Enterprises, RUSHA, is a very bullish Chaikin power gauge rating, strong trend, strong industry group as this stock trades above its rising long-term trend line. Money flow is bullish. The stock is an outperformer as it has been since June, actually seeing a bit of an uptick in relative strength here recently. And the stock is entering an oversold position. Now, on Wednesday, they reported earnings that really beat expectations. The EPS of 60 cents against estimates of 34 cents. Stock snapped higher yesterday, triggered a money flow buy signal. One of the buy signals here that we utilize at Chaikin Analytics. So take a look at a name like Rush Enterprises, RUSHA. It's leveraged to some of the themes and the shifts in the themes that we've been talking about here for a couple weeks now. Let's take a look at the sector tracker now. Movement over the last 5 days of trading. There's your utilities at the top of the list. Kind of still playing out. It's an interesting dynamic and an interesting theme. Communication stocks rallied earlier this week, and the number 2 slot. Financials appear to be coming on. And what I'm seeing is, the bank earnings from the majors didn't do much to get the group going. But we're seeing it in the regionals now, and that is interesting and largely, I think, a function, number 1, earnings, and number 2, this curve steepening that's been playing out. Healthcare rounds out the top 4, also the groups that are higher over the last 5 days. Materials, industrials, energy, and staples are middle of the road. Discretionary under pressure of late. We've seen the builders come under pressure as rates have gone higher. REITs, kind of their own story. And then tech, there's a lot to unpack in tech, in my opinion. With kind of regulatory scrutiny in Congress, rates backing up, right? Cyclical names starting to outperform. It's an interesting dynamic. So we're watching it, but it's at the bottom of the list over the past week of trading. Our industry in focus, telecom services, has been a mess over the past 6 months, lagging the S&P 500 by about close to 11%. Power bar ratio, which looks at future potential, is weak. 13 bears to 6 bulls. It's currently ranked number 18 of 21 subsectors. So names in here that we want to avoid, maybe even look to go bearish if you trade that way. Anterix, ATEX, very bearish rating. Inseego, INSG, very bearish rating. And Boingo Wireless, Wi-Fi, WIFI, with a very bearish rating here at Chaikin Analytics, all holdings of a fund that has a bearish ETF rating. XTL, bearish rating. The trend is labeled as strong since it's above the trend line, but let's call it flat. Okay, let's be realistic and call it flat. Money flow bullish, but an underperformer, and it's been an underperformer since August. So what we have here is a fund that's underperforming. It has a bearish rating, kind of going nowhere, over the past year. So it's hard to get excited there. Hard to look at anything, right? It's not a group where it makes sense to be hunting for bullish ideas, in my opinion. So just kind of keep that in mind as you're doing your work. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers align. ALGN earnings report sent that stock higher by 35%. Gap and an analyst day with some positive commentary there. Maybe the Kanye effect is playing out for the Gap. That stock higher by 13.6%. DFS, Discover higher by 9% on earnings. SNA, Snap-on 9% to the good following their earnings report. Expedia was up 9%. The OTAs, the online travel agencies, had a good day yesterday as well. On the loser side of the board, Cincinnati Financial catches an unfavorable ruling in a North Carolina court case. That stock lower by 9%. Tesco, TSCO, Tractor Supply down 8% following their earnings announcement. Citrix, earnings before the bell. That stock lower. Earnings before the bell yesterday. That stock lower by 7%. Kimberly-Clark, earnings report down 7%. UNP, their earnings report takes 6%, a little over 6% out of that stock on the day. So let's dive into the charts, because this is arguably one of the more interesting developments in the market right now. The copper to gold ratio, you've seen it here before. This is one of the relationships that I look at to get a sense for what are market expectations as it relates to economic growth. I'm not an economist. I don't spend my day poring over the economic data. I am a markets person, and I get my message from the market. And the message was clear for the past 2 years, right? This downtrend in the copper to gold ratio was telling us that global growth was slow and or slowing. And in that environment, the stage was set for growth stocks to really outperform. And if you think about why that is, well, in an environment where growth is slowing, i.e. growth is scarce, it makes sense to pay a premium for the things that are growing. So growth outperformed value, right? Growth sectors outperform the more cyclical sectors of the market. Now, we've been seeing a slow shift. All right, we've talked about it. In June, we started talking bullishly about materials. 8 weeks ago, we started talking bullishly about industrials. I have my eye on the financials, and we all know that sentiment is bombed out in the energy patch. So what's interesting to me now is the market appears to be pricing in an improving global growth environment. And now it is early days. There's no two ways about it. The 200-day moving average of this ratio is still moving lower, but we do have a near-term breakout. We do have a potential shift in the RSI to the upside, indicating that we could be entering a bullish regime. So this chart has major implications in the market, has major implications for the growth over value trade, has major implications at the sector level, right? If you think about it in the context of growth versus cyclical names, secular growth versus cyclical names. So I think it's really makes sense to pay attention. Where is this playing out? It's playing out as the curve is steepening, and by definition, bear steepening, i.e. bonds are under pressure as the curve steepens, right? So yields are rising, and rising faster at the long end of the curve. So the bear steepener is in play. This to me also speaks to the inflation theme that we've been talking about, right? And coincides with those rising rates as well. So just something to keep in mind here as you think thematically about what's happening in the market. And then here's another look at it more broadly. I mean, take a look at DBB, the Invesco DB Base Metals Fund. I mean, we've broken out, trading near the highs, above the 50-day moving average, above the 200-day moving average. Notice on this pullback did not become oversold and is now shifting. The RSI is shifting into a bullish regime. Look at the scooter on DBB snapping higher as well. So you could start to connect the dots here on what's potentially playing out in the market. And it's really interesting because it's a shift. And if it continues, it's a major shift with, in my mind, major implications in the investment landscape. So something really to be focused on, something to really be paying attention to. And it's going to show up here, or it has the potential to show up right here. Here's that growth versus value ratio. Been stalling since September when we called it extended, and it's just been choppy ever since. Still above the trend line, the 200-day moving average. But look at the RSI, a series of lower highs, middle of the range right now. Check out the Qs versus the SPY. They've gone nowhere since July. So this is an interesting shift in the marketplace potentially, right? You're going to want to watch here. If this breaks down, we'll have confirmation that these themes are continuing to play out. So really interesting day, a really interesting week, despite not making a lot of progress in the averages. Really interesting week. So a lot to think about going into the weekend. Take us for a test drive, chaikinanalytics.com/test drive. Have a great weekend. I'm with you on Monday.